Fundamental analysis is a method of evaluating the intrinsic value of an asset, company, or investment by examining its financial and economic factors. The goal is to determine whether an investment is overvalued, undervalued, or fairly priced. Fundamental analysis focuses on assessing a company's financial health, competitive position, and economic environment to estimate its intrinsic value. It helps investors make long-term investment decisions by identifying strong companies with growth potential or undervalued assets. Quantitative analysis focuses on numerical data and financial metrics from the company's financial statements. This includes the income statement, which evaluates profitability, revenue, and expenses. The balance sheet examines assets, liabilities, and shareholder equity, and the cash flow statement tracks the company's cash, inflows, and outflows. Qualitative analysis involves non-numerical factors, such as management quality, brand reputation, and industry trends. This includes the management team's experience, leadership, and track record. The business model, which shows how the company creates value. Competitive advantage, which refers to unique attributes like patents, brand, or market dominance. And industry position, which looks at market share and competition. Economic analysis examines macroeconomic factors influencing the company. This includes GDP growth, inflation, and interest rates, industry-specific trends and government regulations, and of course, global economic conditions. By combining these components, investors can make well-informed decisions. Profitability ratios assess a company's ability to generate profits. This includes gross margin, which is calculated as gross profit divided by revenue, then multiplied by 100. Operating margin is calculated as operating income divided by revenue, then multiplied by 100. And net profit margin is net income divided by revenue, multiplied by 100. Liquidity ratios measure a company's ability to meet short-term obligations. The current ratio is current assets divided by current liabilities. The quick ratio is current assets minus inventory divided by current liabilities. Debt ratios evaluate financial leverage and solvency. The debt-to-equity ratio is total debt divided by shareholder equity. The interest coverage ratio is operating income divided by interest expense. Valuation ratios compare the company's value to its earnings or sales. The price to earnings, or PE ratio, is share price divided by earnings per share. The price to sales, or PS ratio, is share price divided by revenue per share. And the price to book, or PB ratio, is share price divided by book value per share. Growth metrics assess historical and future growth potential. This includes the revenue growth rate and earnings per share, or EPS growth. All right, let's dive into the steps in fundamental analysis. First, analyze the economy. This means understanding macroeconomic indicators like GDP growth and interest rates, and their potential impact on industries or companies. Next, evaluate the industry. Study industry dynamics, market trends, and competitive forces using models like Porter's 5 forces. Then, study the company. Assess its financial performance, competitive advantage, and management. After that, determine intrinsic value. Use valuation methods like discounted cash flow, or DCF, or relative valuation to estimate intrinsic value. Finally, compare with market value. If the intrinsic value is greater than the market price, the stock may be undervalued, suggesting a buy. Conversely, if the intrinsic value is less than the market price, the stock may be overvalued, suggesting a sell or avoidance. Now, let's talk about the tools and resources you'll need for fundamental analysis. First, financial reports. Use annual and quarterly reports, such as 10K and 10Q filings. Next, news and market data. Stay updated on company and industry news. Then, financial platforms. Tools like Bloomberg, Yahoo Finance, or TradingView can provide real-time data. Lastly, economic reports. Monitor central bank reports, GDP updates, and industry studies. Moving on to the advantages of fundamental analysis. One key advantage is its long-term focus, making it ideal for identifying undervalued assets with strong growth potential. Another is data-driven decisions. This approach combines quantitative and qualitative factors for thorough analysis. Lastly, risk mitigation. Fundamental analysis helps avoid overvalued stocks and identify companies with solid fundamentals. Of course, fundamental analysis has its limitations. First, it's time-consuming. It requires detailed research and data analysis. Second, forecasting errors. Future performance is unpredictable, even with detailed models. Third, market sentiment ignored. This method does not account for short-term price movements driven by market psychology or speculation. Now, let's look at an example of fundamental analysis. Consider the stock ABC Corp. It has a revenue growth of 10% year over year, a PE ratio of 15, which is below the industry average of 20, and a debt-to-equity ratio of 0.5, indicating low leverage. If industry trends and economic conditions are favorable and the intrinsic value is greater than the market value, this may represent a good buying opportunity.